Hi, professionals. This is CA Rohanar Pingai, and welcome to my YouTube channel. Today, we are going to discuss case laws related to direct tax under the video series What Law Says Part 2. Let's begin and let me allow to share my screen. In the screen is visible. So, what law says direct tax part 2. And under this, we are going to discuss 4 IPET case laws and 3 High Court case laws. So let's start. First case, Vishal Pachasia versus ITU IPA number 764, Kolkata 2023. And this is related to AY 2016-17. And date of the order is 7th November 2023. And this case law is related to section 205 of the Income Tax Act 1961. Let's understand the facts and issue of the case. Assessee was a salaried employee and employer deducted tax at source. However, employer didn't deposit the TDS in government treasury. Assessee in his return of income claimed credit of TDS, which assessing officer CPC denied on ground that same was not deposited by employer. And aggrieved, the assessee preferred first appeal to CIT appeals, who held against the assessee, and then the assessee preferred second appeal to the tribunal. Then tribunal observed and held that once TDS deducted, then liability resulting from non-deposit of TDS by the deductor cannot be fastened upon the assessee. What tribunal observed and held that TDS deducted, once it is deducted by the employer, then liability resulting from the non-deposit of TDS in the rate of the government treasury, then the deductor cannot be fastened upon then non-deposit of TDS by the deductor cannot be fastened upon the assessee. Means assessee should not be held liable for that default by the deductor. So appeal filed by the assessee was allowed. Second case, JCIT versus Vijay Kumar Sayani ITA number 371 Jaipur ITAT 2023 assessment year 2020-21. Date of order 8 November 2023 and relevant section is 271 AAB of the Income Tax Act 1961. Let's understand the facts and issue of the case. A search under section 132 of the Income Tax Act was carried out at premises of the assessee. During the course of assessment, assessee only furnished a revised computation of total income. What assessee did that only furnished only revised computation of total income, but revised return of income, but revised return of income was not furnished. Revised computation of total income was not given cognizance, and assessment of total income was completed by making an addition to return income on account of undisclosed income. The AO also initiated proceedings for levy of penalty under section 271 AAB subsection 1A by issuing show cause notice without specifying the default. What AO has done that he started the proceedings for levy of penalty under section 271A subsection 1A, but without specifying the default. assessee filed a reply to show cause notice, but saying didn't find favor with AO and held that assessee is liable for penalty. Then assessee preferred appeal to CIT appeals, where CIT appeals granted partial relief to the assessee. Then revenue preferred an appeal to tribunal, as CIT appeals granted a partial relief to assessee. Then revenue preferred an appeal to the tribunal. The tribunal observed and held that disclosure of additional income under section 132 subsection 4 itself is not sufficient to levy the penalty under section 271 AAB unless it falls in the definition of undisclosed income. It is very important point here. This disclosure of additional income under section 132 subsection 4 is not sufficient to levy the penalty under section 271 AAB. What is important is that it should fall into the definition of undisclosed income. The AO in show cause notice has neither specified the grounds and default on the part of the assessee, nor even specified the undisclosed income. Therefore, show cause notice issued by AO for initiation of penalty proceedings is very vague and silent about default. Therefore, tribunal allowed appeal of assessee and dismissed appeal filed by the revenue. Next, Sarita Gupta versus PCIT IPA number 1174, Delhi, 2022, and relevant assessment year is 2012-13. Date of order 7th December 2023, and relevant section here is section 54 and section 263 of the Income Tax Act 1961. Let's understand the facts and issue of the case. Assessee is a resident who received a notice under section 147 from assessing officer. And response filed by assessee cleared that income declared in original return of income is same, no change. So they have to consider the original return as it is what assessee said to the in response. AO in proceeding asked assessee to submit details regarding property sold and completed the assessment accepting the return of income. What AO has done is he asked to submit the details of the property and complete the assessment accepting the return of income. But subsequently, what PCIT has done is PCIT called for an examined assessment record, where PCIT found that amount of capital gain was not deposited in capital gains account scheme during the interim period till its utilization. This was the PCIT's observation that capital gain was not deposited in capital gain account scheme during that interim period till its utilization. So PCIT was of the view that AO have not properly examined the case and his order is erroneous and prejudiced in the interest of the revenue. After issue of show cause notice and considering the response of assessee, PCIT set aside order of AO and disallow claim under section 154, and therefore aggrieved assessee preferred an appeal to tribunal. Then what tribunal observed and held that assessing officer had truly examined the issue of sale of immovable property. It noted that PCIT had not doubted what tribunal noted that was PCIT had not doubted the amount of capital gain and also the fact that such capital gain was invested in purchase or construction of residential house. And the basic condition under section 54 subsection 1 of the Income Tax Act was have been satisfied and assessee entitled to claim deduction under section 54. What tribunal observed was that the basic condition under section 54 subsection 1 have been satisfied and assessee therefore entitled to claim deduction under section 54, and therefore appeal filed by assessee allowed. Now move on to the High Court cases. First, Mrs. Malini Ravindran versus CIT Appeals 2023 457 ITR 401 Madras High Court and relevant assessment years 2011-12, 2012-13 and 2013-14. Date of the order 14th November 2022 and relevant sections 119 and 234B of the Income Tax Act 1961. Let's understand issue of the case. Issue under consideration was that whether advance tax paid in subsequent 2 years can be allowed to adjust against demand raised for earlier assessment year. What was the issue is that advance tax paid by the assessee in subsequent 2 years can be allowed to adjust against the demand raised for earlier assessment years. This was the issue. Let's see what High Court, what Madras High Court observed and held that advance tax for subsequent years has been paid in time. The payments were not ad hoc. Okay, what advance tax for subsequent assessment years has been paid in time and the payments were not ad hoc. Means it was completely approximately not ad hoc, but it was determined properly. It was computed and then paid. Therefore, assessee is allowed to adjust the advance tax paid in subsequent to assessment years while computing interest liability under section 234B. This was Madras High Court observations, and what they have held is that. Next, CIT, IT and transfer pricing versus Star Raise 2023 457 ITR 1 Gujarat High Court. Relevant assessment year is 2015-16 and date of order 31st July 2023. And relevant section here, section 9, subsection 1, clause 7, subclause B, section 201, subsection 1, section 201, subsection 1A, and section 260A. And here, there is also relevant double taxation avoidance agreement between India and USA. So let's understand issue of the case. Issue under consideration was that whether payment to non-resident to be treated as fees for technical service and whether assessee was liable to deduct tax. This was the issue. What Gujarat High Court observed and held that service agreement between assessee and GIA USA, assessee was protected under double tax avoidance agreement between India and USA. Mere rendering of service would not be roped into fees for technical services unless the person utilizing the services was able to make use of technical knowledge. Yes, what Gujarat High Court observed and held that mere rendering of service will not be roped into the fees for technical services unless the person utilizing the services was able to make use of technical knowledge. Simple rendering of the service was not sufficient to qualify the payment as fees. Simple rendering of service was not sufficient to qualify the payment as fees for technical service, and therefore assessee not liable to deduct this. Next, Principal CIT versus Power Infrastructure Private Limited 2023 457 ITR 392 Delhi High Court. Assessment year 2013-14 and date of order 18th November 2022 and relevant section 2 subsection 40 and issue of the case was this is actually issue under the was whether loss sustained due to cancellation of lease was capital loss or not. This is related to capital receipt or revenue receipt like that. So whether capital loss or revenue loss. So issue was whether loss sustained due to cancellation of lease was capital loss or not. Let's see what Delhi High Court observed and held. Assessee not only had the right to construct on the said plot, but it had a further right to transfer and alienate the building along with the land to third parties. And therefore, leased land came within the definition of capital asset under section 2, subsection 40. And therefore, when allotment of land was cancelled and compensation with assessee, which assessee received is in the nature of capital receipt and not revenue receipt. Let's go on next. This is very important from a chartered accountant point of view. This case was very much important because this is related to chartered accountant and they are those who are issuing the certificates for foreign remittances in Form 15 CB. Let's see. Murali Krishna Chakrala versus Deputy Director, Director of Enforcement, 2023, 457 ITR 579 Madras High Court. Date of order 23rd November 2022 and relevant rule is 37BB of Income Tax Rules 1962. Let's see issue of the case. Issue under consideration was that whether issue of Form 15CB, that is tax determination certificate, without ascertaining the genuineness of the documents was offense or not. What was the issue? Whether issuing Form 15CB without ascertaining the genuineness of documents was offense or not. Let's see what Madras High Court observed and held at. While issuing Form 15CB, a chartered accountant is required only to examine the nature of remittance and nothing more. What Madras High Court observed and held at is first thing that the chartered accountant is required only to examine the nature of remittance and nothing more. The chartered accountant is not required to go into the genuineness or otherwise of document submitted by his clients. Therefore, prosecution of assessing the facts and circumstances of the case in hand will not be sustained. So here what Madras High Court observed and held at is that 15CB, while issuing 15CB, CA is required only to examine the nature of remittance and nothing more. He is not required to go into the genuineness or otherwise of the documents submitted by his clients. So very much important. Please keep in this mind. Please note down this case law. So I think this is all for this part 2 video series, What Law Says. Okay, I'm stopping the sharing the screen. And if you want this PPT presentation, you can put your email ID below the video in comments. I will immediately email you the PPT presentation. So this is for the day. Have a good day. See you soon.